Bitcoin dumped as low as 56K earlier this morning as the Fed's hawkishness spooked the markets, and $450 million worth of Bitcoin was liquidated in the last 24 hours. And in typical fashion from today's Fed meeting, Jerome Powell gave the market nothing it wanted and nothing it needed simultaneously. Plus, we look at Bitcoin's price action during bull markets to see if 20% drawdowns are anything new. And like with every time that the price drops, we like to take an opportunity to zoom out and look at the long-term catalyst for Bitcoin's price action and how it's demonetizing the rest of the financial world. Alternative investments just don't stack up. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. Isn't it crazy that Jerome Powell's words alone is what fundamentally drives market movement in today's world? Leading up to today's meeting, the market was already positioning itself for hawkishness, especially after the ECI, or Employment Cost Index, rose to 1.2%, above the 0.9% it was in 2023. This goes to show that wage increases are one of the fundamental drivers that is keeping inflation stickier for longer. And at 2 p.m. today, Jerome Powell delivered nothing that we wanted and nothing that we needed simultaneously. He said that Fed interest rates were to remain stable or remain high between 5.25% and 5.5% because there isn't enough information yet to know that we've reached the Fed's target of 2% inflation or are inching closer to it, which we all know is a fictional number and we're never going to go back to, at least not in the short term. The one piece of dovish news that he announced during the Fed meeting was the tapering of quantitative tightening from 60 billion US treasuries a month down to 25 billion treasuries a month, and also 35 billion mortgage-backed securities a month. This means that the rate that the Fed is tightening its balance sheet is slowing, indicating that we're moving towards a posture of quantitative easing. History tells us that although the Fed is doing the right and responsible thing in the short term, when stuff really hits the fan, the Fed's balance sheet will continue to expand and blow out again. But you know what? We'll take the short-term win because Bitcoin's price has reacted positively since the press conference. 2 p.m. the price was around $57,200, and now it's sitting a little bit higher than $58,000. In the wake of Bitcoin's price collapse, people like Jim Biacco have moved clearly from the world of being an investor and an advisor thinking about long-term strategies in the macro world to clearly a short-term trader and a short-term gambler. He says that anybody who started investing in the Bitcoin ETFs from when they launched on January 11th are now right about break even in terms of their investments. When is the criteria for a successful investment been after a period of 4 months? He and other Bitcoin haters who like to look at short-term snapshots of Bitcoin's price forget to mention that Bitcoin is up 32% year to date, over 100% over the past year, and over the last 5 years, over 900%. Real investors, long-term investors, and Bitcoiners alike know that we are in this for the long haul and that 20 to 40% drawdowns are just part of the game. In looking at past price movements, there's always a point in every bull market cycle where Bitcoiners, well, not really Bitcoiners, short-term traders and gamblers and the mainstream media says that Bitcoin is a Ponzi scheme, it's over, the bull market's over, and you all are fools for investing in this Ponzi scheme. Some people like to call it a roller coaster to financial freedom. And Bitcoin's a different kind of roller coaster than other quote unquote stable assets. Because you know the worst thing about a roller coaster ride is you start and end at the very same place. Let's take something like Starbucks, who everyone in America loves, and it's a stock that advisors always recommend to their clients. Let's look at its price performance. On today alone, its stock is down over 17%. Over the past month, it's down 20%. Year to date, it's down 22%. Over the past year, it's down 36%. And over the past 5 years, it's down 6%. Talk about a roller coaster ride to nowhere. When you factor in inflation, the increase in other assets that you could have invested in, and the cost of living now that we have in a post-COVID world, would you have been better buying and holding Bitcoin or buying and holding Starbucks? Bitcoin is still in price discovery mode. As you can see from this throwback interview with Becky and Tom Lee from CNBC, where she says a 1 to 2% allocation into Bitcoin would be crazy. That would be like gambling your life savings away. How could any investor do that? And the price was at $5,000 per coin when this interview happened.
Now, if you actually think it's undervalued by that extent?
Well, you know, we think the best approach for most people is just to put 1% or 2%.
Are you saying that? I get that if you're somebody who's got a lot of assets. I still think it's crazy. But for a retail investor, somebody who's saving for retirement and putting that aside, that seems crazy to me.
Well, it's basically the idea that, you know, you can afford to lose 1% if that's 1% of your portfolio.
That's crazy. You might as well throw it away on high fees to an investor, to an average. Like this, you're taking a flyer on that. You don't know where it's going to go or what's going to happen.
Well, in a way, that's right, Becky, that for the majority of people, it's, you know, 1% is like a small risk bet. But, you know, Bitcoin makes all of its gains in 10 days in a year. I think this is an example that, you know, if you exclude the 10 best days, Bitcoin loses 25% a year. So you got to essentially hold it or hodl it, as they say, to really capture the gains.
And you can look at other interviews like this one with Bill Mayer and realize we are still so early in Bitcoin.
Bitcoin was started, or cryptocurrency was started as a goof, really, by someone we don't know who it is, somebody who used the fake name.
It was a decentralized currency so that really when it started, so you could pay for things and not be detected. Like it was all this underground.
It's for criminals.
It was,
that's
when
who
it
uses
started, it was for criminals.
But you know that
it's still for criminals.
But humanity just attaches value to things that really mean nothing. You're wearing a black T-shirt. That could be a black T-shirt from Target. You put a Ralph Lauren thing on it, we just say that that's worth more.
But it exists. It's something. Bitcoin is nothing. Do you know how they establish Bitcoin? Why it uses more electricity than some countries? Did you know that about Bitcoin?
I did know that.
Okay.
Mining.
Because there are, mining. There are football field size buildings that have nothing but supercomputers that are, it's like the game of pick a number from 1 to 10, except the number is between 1 and infinity. And the person guessing the number is in the matrix. And the person who has created the number is a fictional person also. And that's a way to run a currency. You know, Matt Damon, love him, but him and the other celebrities who told people to get into this, they're getting an awful lot of shit now, and I understand why. They suggested that people get into this Ponzi scheme, and it's not going to come out well for any of them.
I think it's not going to come out well for most of them, but some people are actually scoring. The odd one.
Okay, well,
Except Seth Green got his Bored Ape stolen.
His monkey.
Yeah.
Yeah.
It's just supposed to be.
It's also very easy for the money to just disappear if, like, you forget your password.
Yeah.
Then it's just gone.
Right, but if you forget where you bank, you can lose it too.
The average person and average investor still doesn't understand Bitcoin. That's the arbitrage. That's the opportunity. When liquidity enters the market, either through the Fed or the U.S. Treasury, who, by the way, announced their first Treasury buyback program since 2002, which is in an attempt to stabilize the world's most liquid market. The program starts on May 29th. And allows the U.S. Treasury to buy up to $2 billion worth of treasuries and $500 million worth of tips per week, and it has discretion on additional measures it could take to stabilize liquidity. And although there's no fire, this is essentially smoke that we can see smoldering off into the distance to other people to say the Treasury market isn't as liquid and isn't as deep as once was thought or advertised. There's problems brewing under the surface. The liquidity needs somewhere to go and somewhere to flow to. And inevitably, Bitcoin is the best and most effective liquidity absorber there is. But if you choose not to invest your money into Bitcoin, where are you going to invest it right now? The forward PE ratio of the stock market is at 20. I don't think that's expensive. And the commercial real estate market is, well, hot garbage. The value of buildings in metropolitan areas are worth less than the paper that they're written on. Listen to what New York commercial real estate developer Bruce Ratner had to say on CNBC with our boy Ross this morning.
Can we talk real estate first?
Sure, of course.
What do you make of where we are? We can talk about mortgage rates just about every single day and where interest rates really sit. But between commercial real estate, residential real estate, I know you're not out of the business. You're sort of in the business, out of the business. But maybe then you can speak freely.
Yeah, I can always speak freely.
So what do you think?
So first of all, let's talk commercial real estate. Commercial real estate is in terrible trouble. I mean, you'll hear people say it's bottomed out. It's not going to bottom out. When you have vacancy rates in this city of 25% and occupancy rates of almost 50% or less than 50%, it can't recover. And that's because our whole nature of work has changed.
Small business confidence is at all-time lows, with 61% saying they don't expect the economy to improve. Inflation continues to rip and remains stickier and more persistent than the government or anyone had thought. And we all know how expensive residential real estate is right now. We've covered it many times in many episodes. And so with that, where are you to invest your money if it's not Bitcoin? What else is attractive right now? Bitcoin is demonetizing the monetization that has been trapped in these asset classes over the last 50 years. I mean, look at this great chart from Wicked, showing Bitcoin as a store value relative to other assets you could have invested your money into. As Michael Saylor says, Bitcoin is for the money you can't afford to lose. Swan is on a mission to help you avoid debasement and help you think how to properly allocate your portfolio into holding Bitcoin so that you can avoid the fiat debasement and monetary debasement that's coming down the pipe when liquidity enters the market. Not if, but when. Tomorrow at 5 p.m. Eastern, 2 p.m. Central, Hafa Zaguri, Swan CIO, is hosting a webinar in the latest of our retirement webinar series called The Numbers Don't Lie, where he's going to be walking through the long-term potential and implications of these catalysts that we talk about in this show every single day, and how to properly allocate Bitcoin in a retirement portfolio. Use the link in the show notes to sign up for the webinar. Even if you can't make it live, you'll get a link to the recording so that you can watch it later. And with that, we're signing off for the day. This is Dante Cook with Swan.com. Happy stacking.